Britain's biggest department store Debenhams has gone into administration, leaving 25,000 workers fearing for their jobs and many high streets at risk of losing a major outlet. The company was handed over to administrators FTI Consulting on Tuesday morning, who will now reevaluate its assets, debts and make cuts to save the ailing business from collapse. Despite going into administration, it will continue to trade with gift cards still valid across stores and online. As it currently stands, Debenhams has 166 stores in the UK. It employs thousands of workers across its branches, head office and warehouses. However, about 50 branches have been earmarked for closure in the future. These were originally announced in October and planned for the next 3 to 5 years. A dozen are expected to close next year. Not all branches are at risk, though consultants will first focus on renegotiating rents with landlords before making any drastic closures. Debenhams chairman Terry Duddy said, "We remain focused on protecting as many stores and jobs as possible, consistent with establishing a sustainable store portfolio in line with our previous guidance. In the meantime, our customers, colleagues, pension holders, suppliers and landlords can be reassured that Debenhams will now be able to move forward on a stable footing." A spokesman for the company's pension scheme said the schemes had been transferred to the newly incorporated company. Members can therefore be reassured that the schemes are carrying on as usual. Who now owns Debenhams? The chain's lenders, made up of high street banks and U.S. hedge funds, have now taken control of it and will look to sell the business on, while shareholders will lose their investments. Even Mike Ashley's near 30% stake in the company, which cost about £150 million to build up, has been wiped out. Current owners include Barclays and Bank of Ireland, as well as Silver Point and GoldenTree, which Debenhams stores are closing. Towards the end of 2018, Debenhams announced it was increasing its store closure plans from 10 to 50. On Tuesday, it confirmed the same 50 are earmarked for closure, but could not clarify where these would be or when they'd close. It is estimated the cuts will affect around 4,000 jobs. The first wave of closures, thought to be 12, are expected to happen next year. Speaking to Mirror Money in October, a Debenhams spokeswoman told us the closures are part of a 3 to 5 year plan that will reshape the 240-year-old chain. Of all 166 in the UK, 50 of stores that could be the least profiting over the next 5 years are the ones at risk. These make up less than 15% of the chain's overall annual profits. A spokeswoman added that there are various types of stores that could be classed as safer than others. It's said that the most at-risk Debenhams branches will be the smaller ones that tend to bring in the least takings. Speaking about the ones most likely to stay, it named the 5 stores that have undergone extensive redevelopment or have opened very recently, such as a newly opened gin bar branch. Its 5 flagship stores, which tend to account for the most sales, are also likely to go untouched. 5 Debenhams flagship stores considered safe: Stevenage, Oxford Street, Birmingham, Bullring, Manchester, Trafford, Glasgow. 5 new refurbished stores considered safe: Watford, Meadowhall, Reading, Cambridge, Leicester. 2 of the 50 Debenhams stores that closed in 2018, Farnborough, Eltham. When will the Debenhams closures happen? A Debenhams spokeswoman previously told Mirror Money the closures will take place over the next 3 to 5 years, however this could be accelerated by it going into administration. It's expected that the business will assess underperforming stores first and, where possible, attempt to lower rent prices before making any changes. A spokeswoman told the Mirror any cuts would be communicated to employees before going public. The first wave of closures, thought to be 12, are not expected to happen until early next year. Read more top money stories